Hello guys, and welcome back to my YouTube channel. My name is Trader Joseph, and in today's video I'm going to share with you a very powerful trading strategy. As you can see, this is the 4 hours time frame, and we've been holding this trade for quite some time. Okay, now if you look at this entry, we had a very crazy entry right here. Very crazy entry. Now these concepts are just simple or advanced concepts. It just depends on how you understand them. Okay, they're just simple or advanced concepts. If you look at that particular zone from the 4 hours time frame, there was there was like an imbalance there. Okay, if you look at this zone right here, there was an imbalance there. So this market pulled back from this zone and went and tapped this imbalance before it started coming downwards. Okay, that's what the market actually did. Okay, because whenever there's an imbalance, the market tends to come back and fill it. So from this point to this point, there was no buying movement inside here, so it made it have an inefficient price delivery. So when price got to this zone, it has to pull back and tap that zone before this massive sell downward. Now looking at this sell downward, look at this sell that we have right here. If we go to the daily time frame, you can see that this is a very mad trade. Can you see, guys? Very mad entry. I've heard this trade since yesterday. Can you see where I actually entered this trade? I entered this trade very accurately yesterday. There was no single drawdown, no single drawdown. So we're winning very massive profit. Now if we go to gold, let me show you gold. If you go to gold, you see that there's almost something very similar right here that happened in gold. The market came and tapped this. There was an imbalance on this zone. From here to here, there's an imbalance. So the market ranged here. The market ranged here before it later came and tapped this imbalance. And as soon as it tapped this imbalance, bam! You see, guys, how very sweet this entry we had here. All of them. Can you see? There was no single drawdown. Can you see, guys? Very accurate entries. Very accurate entries. There was no single drawdown. Okay. So I'm not actually trying to show you what I don't know. I'm showing you what I'm using. Okay. And if you look at this trade also right here, you still see the same thing. So whenever you see imbalances or fair value gap, you can call this an imbalance, you can call it a fair value gap. Whenever you see something like this, you just know that this market wants to, and when the market comes and feel it, it's going to sell. Okay, it's going to react. It's definitely going to react. So now how the market reacts to that zone depends on how you come up with your top down analysis. From higher time frame analysis, you can find out that the market is actually in a trending market condition. So if you do your top down analysis and you find out the market is in a trending market condition, you can now decide to hold your trade for longer, because it's going to give you very massive sales. So let's just quickly go back to the trade that was in profit. Okay, so can you see, guys, this is actually 528, but we are still holding this particular trade because I'm looking at this market to sell very well. I'm looking at this market to sell. If you look at these zones right here, if you look at this is just general projection, long-term projection. If you look at these zones right here, all these zones, look at this zone here. Can you see there was an imbalance? There's an imbalance there. There's an imbalance. Okay, there's another imbalance here. Okay, there's another inefficient price delivery here. So this particular trade could likely get to this zone. You get, so markets would likely get to this zone. It may take some days, it may take a longer period of time, but markets eventually get to this zone, and it may even come and still take out this zone. You get, so this is just basically how it works. Okay, so now let me just quickly show you how you're going to set up your charts. Okay, because if you look at this charts right here, it still also gave us a very good confluence. If you look at the 1 hour, you always use the 1 hour time frame. Okay, always use the 1 hour time frame. And let's use the 1 hour time frame. Okay, so from this 1 hour time frame, this is where the market started changing direction from here, from these zones, or from here rather. market started changing direction from these zones. Okay, so that's how we got our confirmation again. And the next confirmation we used is the fair value gap we saw above. All right, that fair value gap. Okay, then also if we looking at this indicator we have here, we saw that the market has broken this zone. Okay, it has broken this zone, so it has now changed direction from here. It changed direction, started selling. Okay, so it gave us that confirmation. So guys, this is just one way you can actually view the market. Okay, so let me just quickly show you how to set up your charts. We're going to be using these three indicators: the relative strength index, envelope, and the moving average. So in your relative strength index, your period is 14, then apply to close, then your style is 1 pixel, then use color white. So for your levels, use level 10, level 70, 150. Okay, so this is going to be your levels. There's 10, level 70, level 100, and level 50. So once you have these 4 levels figured out, you go back and you click on save. Okay, you click on save. So now the second indicator we're going to be using is your envelope. So basically the envelope, you're going to be adding it to your indicator window 1. Okay, so make sure you click on your indicator window 1. Then you look for envelope. Okay, when you find the envelope, this is going to be your parameters. So the period is going to be 75, the shift is going to be 0, the derivation is going to be 0.950. Make sure this is 0.950 because this is not the default settings. Then in your method, use simple. Your apply to close. Then in your style, use 2 pixel. Then in your upper band, use color blue. Your lower band, use color red. Okay, just leave your levels blank and leave the time frame to all. So as soon as you have all of this figured out, you click on save. So the last and the final indicator we are going to be using is the moving average. So you still go to your indicator window 1. So when you click on indicator window 1, you look for your moving average. When you find the moving average, this is going to be your parameters. Your period is going to be 1, then shift is going to be 0, method exponential, apply to close, 2 pixel, use color black. Then just leave all of these levels like this. As soon as you have all of this set up, you click on save. As soon as you figure out how to set up your chart, you're gonna have something like this on your chart. Okay, so this indicator is just something that's gonna show you the change in direction. Okay, it's gonna show you the change in direction. Okay, so you're gonna need to figure out where the market is actually going to. Okay, but this indicator works very well if you want to scalp and when the market is ranging. Okay, it lets you trade the market better when the market is ranging, like maybe the 1 hour range or the 30 minutes range. So you can now trade the top, trade the top, trade the bottom, and stuff like that. Okay, so but in a ranging trade like this, you have to know that the market is actually ranging and you trade alongside the direction of the market, because the market is actually moving to just one particular direction. You have to trade in line with that particular movement of that particular day. So currently the market is in a very good trending condition. Okay, the market is currently in a very deep trending condition. So we're just gonna focus on trading in the direction of the market.